Thank you very much. As he said, my name is Phyllis Costanza, and I work at UBS. UBS is the largest wealth management firm in the world. It manages about $2 trillion of assets. And UBS Optimus Foundation is actually a client bank. We're not part of corporate social responsibility or community affairs. We're a service for our clients. So our clients make donations through Optimus, and 100% of that money goes out to programs. And our value proposition to the clients is that we're going to focus on one area. It's not for all clients, but our focus is children's health, education, and child protection. And we're going to help drive performance, and we will report back to the clients on impact. We also tried this year to match client donations, which, as you can imagine, was very attractive. We increased our donations from last year, 7.5 million Swiss francs, to this year we're already at about 30 million, just by taking an additional 10 million and matching a portion of client donations. So leverage is extremely important to our clients. We are partnering, this is the first education DIB with Children's Investment Fund Foundation. Educate Girls is the implementing organization, and Instiglio is the intermediary. I was talking to a friend last night and telling her I was here to talk at a DIB conference, and she said, DIBs are kind of like unicorns. You know, I keep hearing about them, but I've never actually seen one. What does it look like? What does it feel like? Who's interested in these things? Do they really exist? So while we haven't really officially launched ours, we've done a soft launch, so we've announced it, we're working on it, but implementation doesn't start until the new school year in India. But I could tell you we're building the unicorn. So why are we doing this? As most of you in this room know, overseas development assistance has gone down from 0.5% of GNI in 1970 to 0.3% in 2013, and far off the UN goal of 0.7%. So we need to look at different ways to generate predictable and sustainable sources of financing and to make the money go further. So it's really what we're talking about here is how do we raise additional funds, but not only that, how do we use these resources much more efficiently? Finance also is becoming much more diverse. There's new development partners, development finance institutions, philanthropic organizations, and private investors are working together alongside traditional donor agencies. And if you look at impact investing, and this is investments intended to create a positive social impact as well as a financial return, it's started to channel some private sector money into the space. But it's still very early days, and particularly as a contribution to development finance. And development impact bonds, as part of that, can enable a lot more impact in development. The difference is when you look at impact investing, what always gets squeezed is the impact side. But on development impact bonds, it's not possible. You have to deliver the impact or there'll be no financial return. So this is a busy slide, which I won't talk much about, but this is data from UBS. And what we're seeing from our clients is an increasing interest in this, and particularly as it relates to millennials. So millennials, there's probably a few of you here. It's certainly not me, it's my children. But $41 trillion of assets will be transitioned in the next decades to millennials. So we have to see what they want. 45% of them want to use their wealth to help others. They see profit with a purpose. And they look at their career, their consumer choices, their investments and their philanthropy in a landscape where market driver solutions are a very powerful answer. So if you look at this slide here, what this tells us is simply where our UBS investors are investing. And primarily, they're looking at very mature investments right now. Only less than 3% are going into things like soft loans or grants. So I talked about the global decline in funding, the opportunity from millennials, and now let's look at India. Why a dib in education in India? There's a global learning crisis. 250 million primary-age children can't read or write. And while the number of out-of-school children has dropped from 105 million in 1999 to 57 million in 2013, that decline is slowing down, and expectation is that number will go back up to 75 million by 2015. So, and that situation is worse for the most marginalized children. Also, we see aid to education declining. And aid to basic education fell by 20% from 2009 to 2012. And there's currently about a $38 billion funding gap in terms of providing good quality basic and lower secondary school education for all by 2015. So if we look at the situation in India, we have in India more than 2.4 million NGOs. That means that there's one NGO for every 400 people in India. Yet, India still ranks amongst the worst or least performing countries on the global PISA index. In 2012, India was ranked the worst of the G20 countries in which to be a woman, and the fourth worst in the world. There's 200 million illiterate women globally, and a third of them are in India. In India, there's about 3.7 million out-of-school girls, and most of them are in Rajasthan, which has 9 of India's 26 critical gender gap districts. This development impact bond we're funding is in Rajasthan, where there's 44% female illiteracy, and an average girl spends 6 hours a week on caring for her siblings and childcare. 68% of girls are married before the legal age, and only 1 in 100 girls will ever reach class 12. So we all know the benefits of educating girls. An educated girl has healthier children, has fewer children, marries later, and then there's tremendous benefit also to the country's social and economic status. So we identified a grassroots NGO called Educate Girls, and they've already brought back 52,000 girls to schools and increased attendance from 67% to 82%. They increased the number of girls' toilets from 44% to 71%, and increased math and English scores by 30%. And they did all of this at a cost of roughly $500,000 a year, which is a small fraction of what governments and donors have to spend to achieve similar results in India. And since 2008, Educate Girls has grown from 500 to 5,000 schools in 3 districts in Rajasthan. But they have plans to scale. They want to grow to more than 30,000 schools, which would allow them to reach more than 4 million children by 2018. So how do they scale this? So to finance this, they've been looking for alternative methods. So when they approached me through actually Instiglio, they asked if we would be interested in participating in this development impact bond, but they didn't have an outcome payer. And somebody came up to me to ask me, how do we find outcome payers? It's so difficult. Well, I had the advantage of having worked at CIF, Children's Investment Fund Foundation, for 8 years. So I knew where they did very well and where perhaps a DIB would be beneficial to them. And a few things about us. First of all, we're using client money. They want a return. CIF As many of you probably know, they are very outcome-oriented. They only want to pay for outcomes. They do a tremendous amount of due diligence. It sometimes takes more than a year to do the due diligence. Probably means they're not very risk-averse. And they're very adamant about impact. So when I went to them and said, this is a great opportunity for you, you only have to pay for the outcomes. You don't have to spend all of that time and human capital doing the due diligence. We'll take all the risk for you, and you just pay us. So they found that attractive, and that's how we got them involved. Now, are there a lot of other organizations out there that have a huge endowment and a hard time getting the money out the door? I would argue, yes, there's a whole lot of them, particularly in the United States, who should be spending a lot more than 5%, and this might be the target. So what is this DIB? The DIB is designed to enroll girls in school, to keep them in school, and to improve learning outcomes for all the enrolled children in the school in Rajasthan. UBS Optimus Foundation is the investor. SIF is the outcome payer. Educate Girls is the service provider, and Instiglio, Mike will speak later today, is the intermediary. This DIB is really a proof of concept for us. We're trying to reach 30,000 children. It's relatively small from a financial perspective. It's about a 350,000 franc DIB. But in terms of numbers of children reached, I think it's probably, it's extremely large, and for SIBs as well. And the cost of this is about $12 per child. So for success for us as the Optimus Foundation is not about earning interest, but it's really about creating a new marketplace, keeping our eyes on what the millennials want. So philanthropists and investors can find very clear, time-bound, outcome-bound options for achieving both social and financial impact. For this first DIB, just so that you know, we're not using client money. We're actually using the bank's money because it's a proof of concept. So our clients, even now, not even the millennial generation, many of them aren't interested in complex log frames. They really just want to know what happens to their money. But I still get a lot of clients who come to me and say, I want to build a school, or I want to support an orphanage. So there's a lot of opportunity to shift them into more impactful investments. What at Optimus we feel is our goal. So how does this DIB work? The goal of this is to provide a new source of financing and achieve improved social outcomes in developing countries. And as I said, with the DIB, you can't squeeze the impact. So for us, it's very attractive. What we'll ultimately do is get our clients to provide the external financing, which we're currently providing, and then we only receive a return if the pre-agreed outcomes are achieved. And then the outcome payer will remunerate the investors based on the outcomes at the end of the program period. There's also an incentive for the implementing organization, and they'll get a bonus if they exceed the expectations. So we think that development impact bonds have the potential to improve aid efficiency and cost effectiveness by shifting the focus onto the implementation quality and the delivery of successful results in a number of ways. So we think that DIBs will rebalance accountability. In traditional aid, by paying upfront, donors will accept the bulk of the risk of program failure. And the DIBs redress this balance by sharing the risk for delivery with the partners. There's increased innovation and flexibility in delivery. So if an implementing organization sees that things aren't moving as expected, we don't care about the outputs at all. We're not going to stand on their neck to deliver outputs for us. They can change things as they see fit. Increased transparency and accountability for results, which we've heard about from our previous speakers, and it creates a very strong culture and focus on performance in service providers. So as part of this proof of concept, we have a complicated structure, which is reflected here. I guess we've got a DIB working group. Some of you, I think, in this room are on that, where we've brought together the experts in SIBs, because there are not yet many experts in DIBs, together to help us think through the outcomes payment methodology, which is very interesting, intellectually challenging. How do we weight different outcomes? So, for instance, scheduled CAS are paid differently than non-scheduled CAS. So the girls who are hardest to get into school, we expect will cost more to maintain in school and to improve the learning outcomes. So the outcome payer SIF will pay us more to increase performance for those girls. And we also have a DIB DIB working group and advisory group, and one of which will write up all of our findings, which we'll make very transparent. And our goal is to try to keep all of this very open source. So we'll share with everybody the contracts, the methodology, the payback mechanism, the evaluation methodology. We're not doing that right now because there's a big risk. If we do that, that will compromise the integrity of the control group. So right now, and frankly, we're still developing it. It's not public yet. So what does success look like for us? As I mentioned, we want this to become proof of concept, promote pay for performance, and we think we can change the way that high net individuals, ultra high net individuals, and also hopefully governments will allocate their education budgets. Somebody asked early, I think it was Rita, about whether or not, what's the end game? Is the end game from a DIB to move it to a SIB? That's not our goal with this. Our goal with this is to demonstrate the impact. It's very difficult because there's an indirect economic benefit to society of getting girls into school. It's very hard to measure that benefit, but we know from many other studies globally that it has an impact on the economic performance of a country as well. We also look at this new kind of accountability, which measures outcomes, not are we building schools and how many schools have we built, but are we really solving the problem that girls aren't going to school and are illiterate. So the challenge for us now is, how do we mainstream this, and can we mainstream this even at a bank that services high and ultra high net worth individuals? Makiko already discussed many of these challenges, so I'll move quickly through them. But one of the big challenges is the small average deal size. Big challenge to mainstreaming this. So a pension fund will look at a minimum of a $30 million investment, and we're investing $350,000. So it's a far cry from getting mainstreamed. Also, the fit with the asset allocation framework. The risk-return portfolios are measured by considering things like liquidity, volatility, portfolio match, exit timeline strategy, investment style, and all of this is quite different in the DIB environment. And then I also talked about the double bottom line issue. Improving girls' enrollment rates and performance in India has very long-term positive benefits that governments can't readily measure. And some people will only invest in impact enterprises whose fundamental business model is tied directly to immediate social and environmental performance. So that will be a challenge, and I think Makiko already discussed some of these regulatory barriers, so I won't dwell on them. So what's next with the DIB revolving fund? So for Optimus Foundation, our goal, as I mentioned, is to bring more and better money to impactful programs for children. And how can we do this? What we're looking to do now is to take this DIB and create a revolving fund. And what we hope to do is that clients will donate into this DIB revolving fund, and we'll also make program-related investments with us. So this is loans to nonprofit organizations to help them, to give them the working capital in order to raise more funds. And these program-related investments and interest will either be repaid directly by the grantee through income-generating activities or fundraising, or investments will be paid by external outcome payers like we're doing with the DIB. And then the repaid capital will be recycled into new program-related investments for our grantees. So what are the pros and cons of this? The pros clearly increase impact, and we can also use the returns to build up a loan guarantee fund. But the cons of this are clearly that clients don't get capital repayment, and this revolving fund will only generate very minimal returns. However, we still believe that this sort of philanthropy, and I still say it's philanthropy, I'm not looking at this as an investment, and we're not positioning it that way for our clients, but that it's still very attractive, particularly to millennials, as I mentioned, and it's going to drive better performance outcomes. So as we're developing this, I urge all of you and ask all of you to please, if you see other opportunities for strong development impact bonds that improve children's lives in education, health, and child protection, please let us know about them because we're trying to build up our pipeline now to do this. So thank you very much.
Thank you so much, Costanza, Phyllis, for this for the presentation, which is very interesting. I just had two follow-up questions, and I apologize if I missed if you've mentioned those already. One is, you said you found a grassroots organization that you thought was suitable to actually deliver the expected results, and I wonder if you could just elaborate a bit on that selection process. Second was, to what extent was the government of India involved, either at national or subnational levels where you're working?
Okay, so your first question, we actually had, we have every year an event called the Global Philanthropy Forum, which was last weekend, ironically held in San Moritz, where we bring together a group of ultra-high net worth people to talk about poverty, but that's another story. So for our event last year, we brought in, we have, as part of that, we do this venture lab, and we bring in interesting social entrepreneurs, and we hold a competitive process. And we invite about 100 to 150 social entrepreneurs to apply to give a 5-minute presentation to these ultra-high net worth clients of ours. And we end up choosing six nonprofits and 6 for-profits. And there is a full process to identify whether or not we think their idea is sustainable, whether it's investable, a number of criteria. So Safina applied, she was selected, and she presented. And then she introduced us to Mike Belinsky, who will be talking to us, who had been working with them to make them DIB worthy. And we started a conversation there. Originally, he had another outcome payer, but they ended up falling through. They didn't want to be the outcome payer. They wanted to be the investor, and we wanted to be the investor. So then we had to find another outcome payer. Is the government involved? The government is involved. Educate Girls works very closely with the government because they're working in government schools, and that's essential for us. The government they know we're doing this DIB. They're very interested in the outcomes and closely monitoring it. There is, I mentioned before, this challenge about making sure that we don't compromise the control group. So that's a challenge in involving the government too closely. So we have to be very cautious about that relationship. And our goal here is to demonstrate to the government that we can get more girls into school at a very low cost and improve their learning outcomes and keep them in school. And hopefully that will encourage the government to scale this up. They've expressed interest, and that's our ultimate goal.
Hi, Joanna Davis from the International HIV/AIDS Alliance. Thank you for your presentation, especially making clear the roles of all the stakeholders, who is the investor and the implementer, etc. I have 2 questions. The first is, what time frame do you anticipate there will be for the implementation and evaluation of the program, especially in terms of retention, measuring the retention of girls that you recruit to school? And secondly, great to hear that you're looking for other opportunities to fund. But I'm just wondering what other investors you've come across, what other organizations are interested in investing in DIBs?
Okay, answer to your first question is 3 years is the time frame for this DIB. We could certainly have a philosophical discussion later. Is that long enough? But the tension there is creating a time period that's short enough to make it attractive, yet long enough to make it meaningful. Other investors. So our investors are our clients. Our clients are high net worth and ultra high net worth individuals. So we haven't really been looking for other potential investors. But we are generating tremendous interest internally. So I can tell you our clients are very interested, and most of our clients have their own foundations, and they would like to invest in this. They see tremendous potential here. And so right now we're telling clients we can't take your money yet. But I think that once we do open it up to clients, they'll be very interested.
My name is Andres Corin. I work at JP Morgan. I have a question with regards to outcomes versus outputs. So I think a lot of times in philanthropy, people are interested in, number of schools or just giving money to the local symphony or what have you. So they're kind of looking more at the outputs, whereas this, DIBs are very much focused in terms of the outcomes, which, as many people in this room know, is costly to measure, takes a long time, etc. Just wondering, one, do your clients understand the difference between the two, and two, do they understand that it's going to be the cost associated and the time period associated with measuring that outcome?
Okay, so they understand the difference between outputs and outcomes when we say that building a school, that outcome stuff is crap. And it is, our job is one client at a time, educating them. And then sometimes we have these fancy events at St. Moritz, and you get the opportunity to tell 200 clients at one time that outputs is meaningless when you're really looking to make significant change in a child's life. And that's actually the most fun part of our job, is changing, and I see it as our goal, and we have a staff right now of 20. It's their job as well to try to direct new money, get new money to good projects. So it's away from the outputs towards the outcomes. But it is one client at a time most of the time. Yes.
Hi, Arnab Acharya from London School of Hygiene and Tropical Medicine. I do quite a bit of evaluations, and I've also taught finance. So I'm going to come from two angles here. One is that you're evaluating projects that are for which you are getting outcome results, and saying that, well, look, aren't these attractive? But then you were saying that clients get no capital repayment, and so what is the investment part of it, or is it a sort of a philanthropy that's actually going to fund long-term business climate environment that's appealing to many of your clients? It would be fantastic if the Rajasthani children could become productive for a lot of firms, from toothpaste to hair products to cars, right? And so is that the idea here? There is, of course, I'm actually evaluating the Millennium Villages project. It's the first prospective evaluation that we're doing. And there we're actually evaluating basically an economic growth model. We go in there and we actually sort of see what works. And do people actually experience 10% growth rate in these poor villages in northern Ghana and have 20% increase in literacy in 5 years? Now that, in some ways could be a project for a DIB project. So I'm exactly not sure how the dip comes in successful projects. That's my question.
Okay, well, the first part of your question was about whether or not people will accept the fact that they're not going to get money back. So we're not looking at this as an opportunity for our clients to make money. What is attractive to them, though, is that their philanthropy money that they would have given anyway is going to be recycled and used again and again and again, hopefully, to have impacts on 5 times the number of children it would have otherwise had. And that's very attractive. There's a lot of money going into philanthropy. But I guess I can say this here because I've been working in the sector for many years. It's an underperforming sector. And we see that by the outcomes. So to be able to channel their money to more impactful programs is a very strong value proposition. But I'll also say the jury's still out, and I have this debate with my colleagues who are more on the banking side of the UBS business, and they say there's no way you could set up this DIB revolving fund and not give clients their money back. They'll never be interested in that. And will we be able to mainstream without that I think it's a very real question, and it's possible that we won't be able to. But there's an opportunity also, if you look at how community affairs or corporate social responsibility money is being used, why not use it to be the outcome payer? That's truly shared value. Clients love it. You're having an impact. And so, maybe, and we're discussing that also at UBS, whether or not we'll do that and actually repay the money. But also if we look at this program-related investment loan, there might be an opportunity if we wrap that in that we can give clients their money back.
Hi, Rod Dubitsky with BRAC USA. I have a question in terms of the documents, how flexible they are if things, let's say, don't materialize as planned, if there are delays in launching the project, if there's a change in desired measurements of the outcomes. What's the mechanism to allow that sort of all the uncertainties that can happen with these sorts of projects? And then relatedly, if you're slightly below the outcome metrics, is it a binary payout, or does the payout a function of how far below the outcome metrics you are?
Yes, so to answer your last question first, it's not binary. So we could get just a portion of our funds back, but we don't get those until the last year. So it's not as if we get paid. We pay out Educate Girls just as we would any other grant. So it's based on key performance indicators, and we'll pay them every 6 months or whatever we determine, but probably not less than every 6 months. And then we'll get repaid by Children's Investment Fund Foundation only after the evaluation is completed. And it's possible to get 50% of our money back. And your first question was?
In terms of how the deal documents deal with
flexibility.
Any flexibility needed, the governance and the decision-making process if you want to change things a bit.
We will be flexible. I'm going to let Mike Belinsky answer that question when he talks, because he's the one who's helping to structure this deal. And he'll talk more about the technical side, but we're very aware that there could be a flood, there could be anything that changes the situation, that delays it. And so we're very realistic and we're forgiving. Any other questions? Okay, so I guess I'm done. Thank you.
Thank you very much, Phyllis. And again, another participant, or rather presenter, who's flown in for the event. Thank you for coming in from Geneva last night. Really interesting to understand about this $43 trillion being transferred to millennials. Obviously offers a very interesting opportunity in terms of a new approach, a new culture in terms of those investments. And even if only 3% of that of the UBS client portfolio is looking at those more impact investment styles. It certainly represents a very large amount of money indeed. I think having heard that UBS Optimus Foundation is interested in new opportunities, you'll probably have your emails rather full by the time you get back to your desk. But that's good news. Always good news to know that there's potential outcome funders and investors looking at these new opportunities. We've spoken a couple of times about the difficulties in the design and the procurement and contracting, particularly at this nascent stage of the marketplace.